My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, I gotta tell you, if the darn Federal Reserve was so worried about inflation, if they were so convinced that the economy's still running way too hot, then what was the point of not raising interest rates today? I found their statement after they held their meeting quite baffling, mystifying even. Because why would they tell so many people, including journalists, they were going to pause because maybe we didn't need rate hikes, when it sure doesn't sound like they believe in a pause? As Nike would tell you, just do it. And this is how you get a roller coaster session where things look rosy and then the statement comes out for the Fed and the market plummets, ultimately Dow finishing down 233 points. S&P, which also fell hard, ultimately rebounded from its lows, finishing up 0.08%. And the crazy tech-heavy NASDAQ, well, you can't even stop that thing. It got hit but soared right back and ultimately gained 0.39%. And, you know, it's the usual suspects that drove it higher. Now, I hate to be so inside baseballs to talk about the Fed. I know you want to hear about your stocks, not the Fed. But I've been warning you, there's a lot of money, we're talking trillions of dollars, betting that the Fed is going to cut rates by the end of the year. Cut! Today, we heard the opposite, that more rate hikes are coming because inflation's still too high and it isn't coming down to their satisfaction. And that's why I said just now that why pause if you're really so worried? Why not just raise? It's obvious the trajectory's too hot for these people, so cool it down more. But at the same time, so many people thought the economy had slowed already and that the Fed would be satisfied and would even have to cut rates soon. Something I've told you is just plain ill-advised, stupid reasoning. After all, you can't raise rates and lower rates at the same time. However, these big money managers, and they are on air all day, this is why I'm addressing this, who believe that the tightenings are almost over, now realize that they were just wrong. And they need to reposition as fast as they can, meaning they need to do a massive amount of selling practically all at once in a number of stocks that made sense to buy only if they were right about rates, which is that they were going to go lower. That's what started today, and I think that kind of confused thinking is going to have to play out over a couple of days. Now, for weeks, I've said that I actually like the narrow rally, unlike everybody else, because we can identify the stocks of the narrow rally winners, the Magnificent Seven, Alphabet, Amazon, Apple, Meta Platforms, Microsoft, NVIDIA, Tesla. And all you do is de-emphasize the others until the market broadened. Then you'd have to start trimming because the bull side would be too crowded with sunshine soldiers who will turn on you the moment things get difficult. That's how we positioned our trust. That's what I've been telling members of the CNBC Investing Club. Actually, we reiterated that stance an hour before the Fed said what we most feared. That selling in non-tech stocks is exactly what happened in this session. Like I warned you, the last couple of weeks, the Johnny-come-latelys heard something they didn't like from the Fed, and they just skedaddled. They didn't believe in what they owned. They had no conviction. They were only buying because they couldn't take the pain of missing the rally. They can't take the pain of the sell-off now, so they're just selling everything. Sell. Yeah, they never had any conviction. I do not trust my fellow shareholders right now, and let me tell you something. You shouldn't either. See, it's classic. You don't get rewarded big when you come in as late as people have in the last few weeks. You only get rewarded when you're early. You can't make big money after the majority of the rallies occurred. You make big money before it's obvious. So now we have to bear the selling, which could last for a bit because so many money managers wrongly bet on what the Fed was going to do. Remember, going into today, Wall Street expected some tough talk from the Fed, but we didn't expect them to explicitly say they'd hit us with multiple rate hikes. You get big moves in either direction when the majority of investors are wrong, as they are right now. Today, it resulted in a big down move in the Dow, and that move could continue because so many hedge funds are too big to do all their selling at once. It'd be easier if they would just come on TV, admit they're wrong, and say they're going to sell, but they're never going to do that, right? Now, that doesn't mean we're looking at the end of the bull market. Far from it. I think the Fed's too excited and sanguine about the economy. We'll sort through things, and maybe we'll get the job losses and wage cuts our central bankers are trying to actually engineer. Rents may plummet as we build more apartments. Housing prices might go down as millennials need to start paying their student loans again. It won't happen yet. Lennar reported a great quarter this evening. The big home builder. Maybe used and new autos will come down. I think used cars are coming down. The Fed didn't have that information. I suspect all this will slow things to the point where the Fed won't need to tighten as aggressively as they implied today. But it's not going to happen overnight. And that's why they skipped raising rates today. They're giving the economy a chance to get weaker on its own. If that doesn't happen, they're going to be right back and they're going to hurt us. Now let's talk about something that has less to do with the Federal Reserve and more to do with human nature. I want to talk about greed. About how bulls make money, bears make money, and hogs. Lately, we've had too much greed around here. I think greed is fine in moderation. But at a certain point, it starts to cloud your judgment and makes things too frothy, especially with the stocks of not-so-hot companies that will suffer if rates keep going higher, as we heard is going to happen today. You have people who are willing to buy anything that seems like it was connected to AI, right? Even when it really isn't connected to artificial intelligence. You have people who believe we're still going to get a lot of takeovers and acquisitions, despite an FTC that's totally hostile to merger activity. You have people who are convinced the mini banking crisis is over with and done. You have people in denial who tell you the Fed can't possibly maintain its tough stance, and Jay Powell is just playing tough, and he is going to cut rates soon. That is all greed-inspired wishful thinking. Those wishful thinkers have to leave the building before we have our next level of advance. It makes it very difficult for that to happen. These same people were on the sidelines collecting their 4 or 5% interest on cash. They missed this whole rally up 20% from the bottom. Now they're thinking, oh, it's easy. We could come in and start making big money. It doesn't work like that. Today, Powell told them they should just go back into cash and save some money, go buy bonds. Don't go buy stocks. That's what he's basically saying, if you want to know the subtext. They moved back to the stock market at the wrong time. So now they're going to go turn tail and go back to the sidelines. When these weak hands are done dumping stocks, we're going to start rallying again. Now, the good news is that there are still plenty of companies that are doing well, especially in what I call the nation-state techs. But we've got to recognize that this market's about to get a lot narrower again. When will the torture end? As I said again and again, until we see no wage growth, until we see unemployment go up, this Federal Reserve will feel compelled to raise rates. That's what they're looking at. They don't want to tamp down on inflation only to blink at the last moment and let it fester. They want to kill inflation stone dead by killing wage growth, okay? Let me tell you why. We're all trying to figure out if we're going to have a soft landing or hard landing, right? You keep hearing that. Well, you know what we left out? What if the plane doesn't want to go down at all? Today, the Fed told us there's just too much jet fuel left in the tank, so it's not safe to land this thing because it could catch fire the moment we hit the runway. They can't land the plane until they beat inflation. Powell and company are saying, hey, let's circle around the airport. Let's burn off that excess fuel and then make a stab at it. Too many thought that the Fed was done. Too many thought the plane was slowing really quickly. They didn't know it was going to have to circle for a while. They thought we were well on our way to beating inflation to the point where the plane might even need to refuel in midair with some nice rate cuts by the end of the year. Today, the Fed made it clear that the last thing we need is that, and that we're going to have to wait a little bit more. Bottom line, we need some more fuel burning. We need some more shakeout. We need to see fewer greedy people. We need the greedy people to finish selling. We need those who just came in off the sidelines to go back into the sidelines. Then and only then will the market be ready to resume the advance. For now, we're just going to get narrower again, perhaps from lower levels, as we circle the wagons around the Magnificent Seven tech stocks and a handful of others with great secular growth themes that brought us up here in the first place. Expect a shakeout. It's coming. Ronnie in Georgia. Ronnie.
Booyah, Cramer. Booyah.
Booyah. What's up?
Longtime fan, first-time caller. I want to know what your thoughts are on Tesla stock, as today it snapped a 13-day winning streak, probably the most overbought stock on the streak. But as the company continues to be a force in the EV market, as they close out their charging deals with Ford and General Motors, not to mention that today Morgan Stanley reiterated Tesla as overweight.
Well, look, I happen to think Tesla's a really good company. I tend to look at how dominant they are, and they're the most dominant company in the industrial phase that I've seen in ages. And I think when the stock comes down, it was up 13 straight days. When the stock comes down, when the stock comes down, maybe you buy some. But I'm not against Tesla at all. I think it's a good situation. Dan in California. Dan.
Hello, Mr. Cramer. First of all, I want to say thank you for everything you do, and I mean it from the bottom of my heart. My
You are
question
quite
is
welcome.
kind of
Thank you.
a little bit different.
Okay.
About 10 to 15 years ago, I bought a substantial amount of Pepsi. About 18 months ago, I bought a fair amount of Celsius based on your interview with the CEO and your recommendation on it. Then along comes Pepsi, and they invest $550 million into Celsius. I know you predict, or you say, do not ever buy a stock based on where you think they're going to make a takeover.
Correct.
But here, I'm in a situation now where I own both of them. I love both of them, and I don't want to sell either one of them.
Then don't.
So,
I think they're both great. They're very different animals. Pepsi is a senior growth stock, and Celsius is a junior growth stock, and they both have terrific trajectories, and I think you'll do fine. Is it diversified to own both? Only within a larger confines of a portfolio, but I like both stocks very much. That darn Celsius, wow, what a hot stock. All right, we need the greedy people to, the ones who came in late to the party. They've been wrong, and they got to finish selling what they just bought, and that's the churning that you're going to experience over the next couple of days. Only then will this market be ready for a broader rally. On Mad Money tonight, Valero's had a volatile 2023. So what will it take for the stock to be a strike for your portfolio? I'm digging into the story with the CEO. And earlier we held our monthly meeting exclusive for subscribers to the CNBC Investing Club. And there were so many incredible questions from club members that we decided to answer some of them tonight, and you don't want to miss it. And last week we covered a company called Confluent. We liked the story. So we're taking an even closer look at how AI has helped the stock catch fire. And that's with the CEO himself. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.